Hello traders, and how are you doing this weekend? Okay, this is the global market report for the review of this week market. Uh, so before we start the global market report, as usual, disclaimer here: the content of this presentation is only for educational purposes only, and you should seek financial advice from a professional investment advisor, from a licensed investment advisors. Okay, we shall begin now. Straight away into the market fear. Okay, hold on, something is wrong here. All right, the fear and greed index, as reported by CNN Business, is still in a great fear. It's the level of 5, and last night I saw that the numbers is going to number 2, very extreme fear. Now, the current market is still being influenced by the coronavirus pandemic that has been reported or declared by the WHO this week. As you can see, last night the S&P 500 index bounced to the level of 2,711 area, and for the entire year in 2020, Nasdaq has going down 16.0. Sorry, S&P 500 has been down negative 16.09%, as compared to Dow Jones Index. It has been dipping 18.76%. On this weekly report, I would like to do some analysis using split line trend analysis on the S&P 500 on the last two financial crises, starting with the dot-com bubble in the 2001 year. Uh, as you can see here, during the first financial crisis of the 21st century, the dot-com bubble S&P 500 deep below the two-third speed lines, and from there it bounced back and recovered. After its recovery, after its recovery in 2007 and 2008 financial crisis, this is the second financial crisis in the 21st century. Again, from the top of the 2007, from the peak of 2007, the S&P 500 then dips down below again, repeating what has been happening in the 2000 dot-com bubble, and then from there it dips and then bounce back, and until now it push the S&P 500 to the highest level of 3,393.52. On the current financial financial situation, corrective action at the moment being driven by the COVID-19 fear and oil price war by the Saudi, the price index of the S&P 500 haven't reached the two-thirds speed line. So at this moment in time, it is just only a major correction at the moment until it dips below this. Maybe we can call it financial or global recession. Uh, but never before in the S&P 500 dips below the one-third of the speed line, because if the any price index or stocks that dips below this level will signal a market crash. So at the moment, it is just only a major correction because the S&P 500 has been climbing so much. It is climbing so much over 3,390.47 points from uh, from the lows of the S&P 500. So it's just only a major market correction at the moment, but it's good for us because all the stock price is getting cheap, and it is time for us to select the best stocks for us to buy on the long side when the market start to recover. So we need to be engaged in the market actively during this time for us to screen and to select the best stocks for us to do, as I said, for when the market tries to recover. Now, I want to share with you this Massimo Corporation, MASI. During this major market correction, this biotech stocks is still resilient. It never dips below the support of this level. It bounced and tried to climb back and tried to break the previous peak in February. It shows that the biotech stock is a good candidate for us to yeah, put into our list. And for me, like MASI, Massimo, I will be starting to get long on these stocks by next week. We'll see how the development will be, how the market react. But again, maybe I will do swing trade and at the same time also day trade. During this time of market uncertainties, major correction is still going on. My trading strategy usually I will trade on the day trade system. I have about uh, nine nine trading strategy for the day trade. And just last night I share with some of you in the global Saham Global Sharia Telegram uh, my live trade doing day trade on several stocks last night, and some of you are seeing that I'm trading it just only for a few minutes, and after that I exit the market. I normally stay in the market for about 30 minutes to about 1 hour doing the day trade, because you don't want to be exposed on the market uncertainty, because the risk is too high. If Monday there's another gap down in the S&P 500, so that will may push the price going below. Okay, but what happened with the stocks is very unique. Again, it is most probably because of its biotech stock, because many people, governments, and other industries are looking for these biotech stocks to provide new vaccine for the COVID-19. One interesting fact is the safe haven gold. Usually during market uncertainties, gold will gain its value. But now it's different. It is losing its value, and it has a break the support level around this area. And we don't know what will happen again by next week, when maybe the gold will push down towards the 1440 level before it bounce back. But again, it all depends on what the market reaction will be by next week. Okay, guys, that is the wrap up of this week global markets report from me. And as usual, you can email me if you have any question, or you can ask me at the Telegram group. Until then, we'll see you again by next week. Goodbye, traders.